Hello again, Emily here with Next Home. In this video, we are going to go over the next step and most important step in the process, a pre-approval for your mortgage. You will need to be pre-approved for a mortgage before you start shopping for your home. And it happens all the time. People start shopping for their home before they know what they qualify for. And that is a huge mistake. And you run the risk of falling in love with a house that you don't qualify for. So let's go over a few steps in the pre-approval process and a few of the documents you'll need so you know exactly what kind of mortgage you qualify for. First, you'll need to prove your income. Your lender will need to see your last month's pay stubs and the last 2 years of W-2s and your tax returns from those years as well. Next, you'll need to discuss the down payment. This is the exact amount that you'll need to put down towards your mortgage. As you know, there are many loan options, and this can affect how much money you need to put down and how large or small this payment will be. Down payments vary. For example, a lot of first-time home buyers use the Federal Housing Administration loan, better known as FHA, which offers 3.5% down. If you are a military veteran, there are programs that offer 0% down, which is phenomenal. You'll also discuss your monthly expenses, so be ready to discuss any debts that will show up on your credit report. This will include car loans, credit cards, student loans, or any installment accounts that you have. All of these liabilities will come into the calculation of your debt-to-income ratio when pre-approving you for the loan of your new home. You will also need to pay attention to your credit score as well. As you know, your lender will need to pull your credit before you can purchase a home. Your credit score can range anywhere from 300 to 850 points. And the higher the credit, usually the lower interest rate will be. A higher credit score will help you get the loan in most cases. Try to avoid having your credit card checked several times. This is called a hard inquiry and can negatively affect your credit score. These inquiries will happen if you apply for a credit card or a loan, so avoid applying for a credit card until you are in your new home. Another way to maintain your credit card balance is to keep it below 40% of your limits. Your loan professional will be there throughout this process to tell you what you are eligible for and to explain the monthly payments, the interest rates, which are record low by the way, and other details. Make sure to write down questions that you may have so your lender can help you with all of the details. I work with some pretty amazing lenders that have gotten so many of my clients to close, and I will gladly give you their information. After you are pre-approved, remember that there is a difference between what you qualify for and what you feel comfortable spending. Identifying a budget and not stretching yourself too thin or putting yourself in a position to not being house poor is a wise decision. Your comfort zone and your max affordability are two completely different budgets. Ask your lender about monthly mortgage amount. With your mortgage, your taxes, your PMI if applicable, which is your primary mortgage insurance. This is what you will have to pay if you put less than 20% down, your homeowner insurance, and possibly an HOA or a Mello-Roos. A Mello-Roos is a special tax assessment on top of the HOA and property taxes. And you pay this back in a bond that was used to create things in your community such as schools, recreation, infrastructure, etc. And once you have been successfully pre-approved for a mortgage with a local lender, you will appear to be a strong buyer to sellers. And when we submit an offer, it is mandatory to include a written pre-approval letter. And this demonstrates to the sellers that you indeed are a serious and capable buyer and that you have been vetted by a local lender who is known and trusted. And the bottom line is many potential home buyers overestimate the down payment and the credit scores needed to get a mortgage today. So if you are willing and able, you may be surprised at your ability to do so. Next video, we'll discuss how to choose the right real estate agent for you and what a buyer's consultation looks like. See you in the next video. Stay home and stay safe.